Hello active traders and welcome to Small Cap Profit and Risk Potential. This is Ken Calhoun coming at you live from Colorado here. I run TradeMastery.com. Really pleased to see so many of you here. I've been doing quite a bit of training on small caps, and in this event we're going to be looking at the profit potential and the risk potential and what types of charts make sense. All information is for educational only. I'm not making any advice about what to buy, sell, or hold. By watching this, you hereby agree not to make actual trades. You may have seen me at the International Traders Expos in New York, Vegas, Dallas, and elsewhere. Great to see so many of you here in tonight's event. Now, in one of our earlier webinars, we covered these 3 tips as success points in terms of trend strength, the consistency. See, the opportunity in cheap charts, I'll tell you, the thing about cheap stocks is it's a dual-edged sword. The volatility can either be a big profit winner for you, but it can also cause a lot of stop losses and failure if you're on the wrong side of it. So one of the countermeasures is to make sure that you find consistent charts like the ones we'll be covering tonight. Make sure the trading ranges are large enough to make the profit loss, the P&L ratio make sense, and then of course use tight stops. What not to trade are low float, pop and drop, thinly traded BS stocks like penny stocks or low volume instruments that are very haphazard and inconsistent. That's bad. Or illiquid, choppy, low range stocks with up and down price action moves. Those do not make sense to trade. Tonight you'll learn how to trade strong breakouts, risk and reward with profit and loss potential identified for each of the charts, how to swing trade stocks under $10 a share, and some success strategies that at least I've put together based on my own trades over the years, and hopefully help you benefit from that as well. It's good to have a 15-day, 15-minute candlestick chart so you can see the 3-week trend, what's going on from a directional trend standpoint, and also look at your daily 90-day candlestick chart. This is what institutional traders use. What would be the profit potential had you traded this? Let's say you just traded, just 100 shares. At $3 a share, you'd be up over $300. What's the loss potential? If you had, say, bought the top here at 5 and got stopped out at 4, you would have lost maybe $100. So that one has a good, best case scenario doing extremely well for you. What a consistent uptrend this is. Magnificent chart. It's tripled, almost quadrupled, going from, actually it has quadrupled from 1.6 to over 6.4. So anyway, those kind of charts are really good to focus on. One of the challenges, so that's an opportunity, right? Or these types of charts that make sense. The challenge is finding them. And that's what I'm launching small cap scans for. Smallcapscans.com, which forwards to my page inside my Trade Mastery Empire as a service to do the hard work, the heavy lifting for you. But let's take a look at some strategies. What do we look for in professional trading? Minor gap continuations are always my #1 favorite pattern in the context of an existing or pre-existing uptrend. One of the key things that you want to look for is the range here, and I've mentioned this throughout our series of small cap webinars, and this is no exception. And again, today is a world premiere of my smallcapscans.com launch. You can go to smallcapscans.com, that forwards over to trademastery.com/smallcapscans, but this is my new alert service. I put together a video. I put a lot of work into this. This is my biggest new launch service in over 3 years, and I'm working my tail off on your folks' behalf. You'll get updated tips, 7 picks of the week, plus a quick 8 or 10 minute video that goes over each of the charts and the patterns that you learn pattern recognition skills. So we like charts that go like this, right? A share of stocks need to have at least a 1-point range and preferably multiple points. Preferably 2 points or better. So for a $3 stock that ran to 5 or just under $6 like ACRX, that's a rock star. Look at the profit potential. If you traded 1,000 shares there, you'd be up $1,000. The loss potential, as you traded 1,000 here, you got stopped out, you'd be down $400 or $500. So when it comes to setting up your charts, it's a good idea to set these up. I use number of days as 15. And I like to look at these on a 15-minute candlestick so I can see major candlestick patterns. The main thing is to look at the directional strength of the trend. How explosive, how strong was this guy, and how much money could you have potentially made had you actually traded it right? And what's the potential risk, the downside, had you gotten stopped out? You also want to use very tight stops, much less than 2 points. I like to use a loss of 2-day low. So if I were long this guy, I'd put a stop at no further down than say $2. Let's say if I got in at 280, I'd put a maximum stop loss at 2, right under the previous 2 days of regression here. Because all trades are not going to be puppy dogs and rainbows. You're going to run into trades that go against you. It's how you react to those that determine your success or failure as a trader. Is how tight can your stops be without getting shaken out and still capitalizing on a good breakout. Usually, here's a good quick tip, day over day breakouts that take out new day over day highs are exceptionally good trends, like this one in ATRS. Notice please my acceleration ramp pattern, steady uptrend and a sharper angle 45-degree angle breakout. This guy had a base near 3, it ran all the way up to just under 4. So we expect that it's stalling right under 4, which is another good tip. Sell things once they hit a 90-cent mark often, or at least tighten in a trailing stop, because often, we buy above a whole number, and I do this in the live room too for my live Trading the Open room members. If we go with higher priced instruments, but for swing trades too, if you buy right above a whole number, say 310, 320, it's fine to sell at 380, 390. For charts with wider trading ranges and multiple gaps, they also make perfect sense to look at for explosive new institutional volume breakouts. What you'll notice when you drop to a daily chart on a lot of these is professional buying strength early on, a 2-candle progression, small followed by large whole row body green candles, as I've taught for many a year, or a wide range candle at the right side of a congestion box leads to new explosive breakouts, but it's turning red here, so we don't want to go long until it takes out new highs, preferably over the whole number. Take a look at this chart. Here's an interesting one that I wouldn't touch with the 10-foot pole, that is CLSN. See, the problem when people think cheap stocks, they think these kind of charts. These kind of charts will get you in trouble. It's like going into a bad neighborhood. You'll probably get robbed. Stop the madness. There's got to be a better way. These kind of trades are destined to give Wall Street your hard-earned money. That's not a good thing. You don't want inconsistent trending charts. Remember, we like charts that go a little something like this. Consistency wins the day. Charts that are pop and drops like this, you may see some kids out there talking about penny stocks or small caps and claiming to have made a fortune here without any P&L proof from their brokerage account, curiously enough to support it. I just say no. These are the kind of charts that get you in trouble. And I wanted to thank all of you for many comments, dozens of comments from traders around the world on my various pages this last month. And many of you had expressed a concern about the pump and dump types of charts, like this one. Well, rest assured, friends, these are the types that I do not cover in my small cap scans or my professional training, either to institutional clients or for you folks or retail traders or whatnot. We do not like charts like this. I mean, I get it. If you happen to hit your ride on a star and got here and got all the way up, well, great for you. But the rest of the traders likely bought up here and they're in the hole down here today and wondering what to do with a losing trade. So we do not like charts like this. Look at this. This is the 90-day daily candlestick chart. Not only did it do a nice breakout above congestion, it has a nice 45-degree angle breakout that we love, with mostly green candles, mostly large green candles, and during the first thrust of the breakout, the volume had a couple of peaks here. So for that reason, this is a good strong candidate, and I like this chart. This one I'm fine with, GRPN. Next up, this is one I like because it did a nice, relatively strong breakout above previous highs. This guy ran all the way from 2 to 3.5. That's not too risky. It didn't run from 2 to 12 or from 60 cents to $3 and then doing a parabolic arc and collapsing back down or any of that kind of foolishness. I like the fact that it's got a nice, slightly sharper slope than 45-degree angles, but that's a hot one. This is a good chart. So this guy ran from 2 to 360, and it's a reasonably strong pattern in MNKD. So I want to do it the right way for you. Honestly, I'm a UCLA grad, I'm a former corporate guy, and I want to give you good training. So now enrolling, join today at smallcapscans.com, and I hope to see you as a member. Give it some thought, and it gives you a good overview of exactly what you can expect once you join Small Cap Scans as my next member. So take action and enroll today, and I look forward to seeing you next time. Until our next event, traders, trade intelligently, trade smart, trade with passion. So anyway, hope to see you as a member of Small Cap Scans. These are the type of charts we like to focus on with reasonably strong trends.